Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EXPAND Energy Corp. Quarterly Report. EXPAND Energy Corporation offers a range of services including acquisition of properties for oil, natural gas, and natural gas, liquids production, exploration of new areas to discover potential resources, development of existing properties, to increase production operations in the Marcellus Shale, in Pennsylvania, operations in the Utica Shale in Ohio, and West Virginia, operations in the Haynesville and Bossier Shales in Louisiana. The stock price of EXPAND Energy Corp has increased by over 18.41% in the past year due to several key factors. The company's strong financial results, including a Q4 2024 adjusted net income of $131 million and a 2025 outlook that included increasing synergy capture to approximately $400 million, have contributed significantly to its growth. Additionally, EXPAND Energy's strategic operational achievements, such as maintaining its position as America's largest natural gas producer with 6.41 BCFE/d production, have also boosted investor confidence. The company's favorable market developments, including being added to the S&P 500 index and receiving an upgraded investment-grade credit rating from Moody's, have further enhanced its financial credibility and attracted broader investor interest. EXPAND Energy's commitment to operational efficiency and shareholder returns, as well as its use of AI and machine learning to drive efficiencies, has also contributed to optimism around margin improvement. The strategic merger with Southwestern Energy Company in January 2024 has significantly expanded EXPAND Energy's resource base and operational scale, positioning it as a dominant player in the natural gas market. Overall, these factors have combined to drive the increase in EXPAND Energy Corp's stock price over the past year. The primary drivers of revenue growth or decline are primarily attributed to the production, marketing, and sale of natural gas, oil, and NGL. The significant increase in revenues from these sources is evident, with a 354% rise in natural gas, oil, and NGL sales, and a 244% increase in marketing revenues. The Haynesville region saw a substantial growth of 282% in natural gas revenue, while the Northeast Appalachia region experienced a decline of 69%. The Southwest Appalachia region also witnessed a notable increase of 122% in natural gas revenue. Additionally, oil revenue increased from $0 to $250, and NGL revenue rose from $0 to $550. On the other hand, the decrease in derivative gains on sales of assets and net loss in 2024 contributed to the decline in revenues. The company's ability to mitigate exposure to commodity price declines through derivative activities also played a role in limiting cash flows during periods of rising prices. Net income and profit margins experienced significant improvement in Q3 2025. Net income surged to $547 million, marking a significant turnaround from the loss of -$114 million in Q3 2024. This trend continued into YTD 2025, with net income reaching $1,266 million, up from a loss of -$315 million in YTD 2024. Profit margins also improved substantially, with net income margin increasing to 18.4% in Q3 2025 and 14.2% YTD 2025, compared to -17.7% and -14.1% respectively in the previous year. The improvement in profit margins can be attributed to increased sales volumes, higher prices for natural gas, oil, and NGL, as well as decreased capital expenditures. The combination of these factors has contributed to a significant increase in revenue and reduction in costs, resulting in improved net income and profit margins. The company's financial performance indicates a positive trend in its operating cash flow. According to the financial summary, the net cash provided by operating activities for 2025 is a significant $3,619 million. This substantial amount confirms that the company is generating sufficient cash from its core operations to support its business needs and investments. The company's debt level has undergone significant fluctuations over the past few years. Initially, it decreased by $873 million from $10,329 million to $9,456 million. However, long-term debt increased from $1,955 million to $3,000 $305 million on page 12. The debt level then decreased significantly due to repayment of prior credit facilities and senior notes on page 15. Despite this, total debt increased from $5,057 to $5,680 on page 18. Furthermore, the company's debt capacity has increased with the addition of a new credit facility worth $3.5 billion in 2025. In terms of interest expenses, there was a significant increase of 111%, $34 million to $72 million in the current quarter, and total interest expense rose by 198%, $59 million to $176 million. Management is focused on expanding energy access responsibly while creating shareholder value. The company aims to achieve net zero greenhouse gas emissions by 2035, maintain responsible sourcing of gas, and improve ESG performance. Key strategies include allocating resources to high-return projects, deploying leading technology, and navigating price volatility through operational flexibility and cost structure. Management is optimistic about the outlook due to its strong natural gas portfolio and investment-grade balance sheet, with plans to complete 250-280 wells in 2025 and invest $2.80-$2.9 billion in capital expenditures. The company has made several key financial transactions in recent years. On the acquisition side, it has merged with Southwestern and acquired a 35% interest in Momentum Sustainable Ventures LLC. In terms of divestitures, the company has replaced its prior credit facility with a new one in 2025. It also repaid $389 million in senior notes due 2025 and redeemed $47 million in senior notes due 2026. Additionally, it used cash on hand to redeem approximately $103 million, $60 million, and $62 million of senior notes due 2029 through open market repurchases. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. The financial summaries confirm that the company has paid dividends on multiple occasions, with specific mentions in pages 3, 23, 31, and 32. Additionally, the company has also engaged in share buyback activities, as noted in pages 8, 23, 31, and 35. That concludes the financial summary for Expand Energy CORP. Feel free to comment below, and I will be happy to answer them when possible.